I'd like to introduce you Martin Purcell, who's a direct response TV specialist. Martin, hi.
Hello, Jamie. Nice to see you.
Nice to meet you. Thanks for being with us today.
That's okay, my pleasure.
So, Martin, you're a specialist in moving goods through TV channels, and for consumers to see that your ads around Europe, buy your product, and hopefully enjoy it. As we know, we're coming into, or it would appear we're coming into some kind of credit crunch or some sort of recession. How is that manifesting itself, and how will that change habits within your customer base and the way you see it affecting going forward?
I think the first thing is that there definitely is a credit crunch. It's been well publicised and people are already starting to feel it. In our industry, which is based on how people use their disposable income, we tend to find, rather against what you would imagine, that people have continued to purchase. What we've discovered is that when people find that they can no longer afford, or they have to defer some of their major purchases in life, like a new home or a new car, then they tend to treat themselves by buying other more affordable products, which makes them feel good and only costs a fraction of the price. So that tends to have insulated us against the current downward trend of purchasing. Now, and that sounds fantastic, but I don't think it'll last. I think that as these bigger purchases end up not happening, then the subsidiary purchases which go with a major purchase like a house or a car will dry up. And in that area our business will likely suffer, because we supply things for the kitchen, we supply things for the car, we supply things for your home. And when you don't have a new home or you don't have a new car, then you don't tend to invest in those things. So I believe that there is a small hesitancy now, and that the credit crunch will feed through into our business a little later on.
So it's a delayed effect, you think, from the point at which people stop making major purchases to the point at which it actually directly affects them.
Yeah, I think there's a definite lag between what hits them in the normal day-to-day world and what actually then follows through into their day-to-day purchasing habits. For example, the mortgage rates up until recently have been the best they've been for many, many years. Credit was easy, and people got used to living that lifestyle. Now those people who were on special mortgage deals can't find them anymore. They can't find them anymore means their mortgage payments go up, which changes their purchasing behaviour, or at least in their head. And later on that will filter through. Most people are on 3 or 5 year deals, so I think over the next 3 to 5 years we will see the bow wave, if you like, of discontent, and the credit crunch really biting into people's lives. And that's when the industries such as DRTV, which tends to be, as I said, discretionary income, may start to feel the pinch.
So what direct effects commercially does the credit crunch have on a business like yours? So for instance, your existing contracts and your whole supplier base and your cost base.
Well, we focused at the first part of this chat about the customer, but the commercial reality is that we have a business to run, we have goods to move, we have transport costs, we have finance costs. If we need money, we need every business needs working capital, and all of those things are becoming tighter, they're becoming harder to acquire, and therefore they're becoming more expensive. So therefore the cost of running the business go up. So in the face that demand may or may not be about to drop, and our cost base rising, then that's the threat for most businesses, I would say, at the moment, unless they are essentially in the service business where they're not moving goods or product.
So has this credit crunch hit any of your other markets yet, or have you seen a same trend happening in other countries in Europe?
Well, I do quite a lot of business in Germany, and as you know, the German customers don't tend to use credit cards. It's about 15% of Germans actually use a credit card to make a transaction, certainly in the direct response television business.
Is that just because of Visa, MasterCard penetration overall in Germany?
It's more to do with historical fact that German people don't like to use credit. They prefer historically to pay as they go.
Right.
And in fact most German catalogue companies offer their goods on open invoice, so you get the goods with an invoice.
Oh, right.
And the rates of bad debt in Germany are for consumer credit very, very, very low. So people don't feel the need to use a credit card. But having said that, the same type of purchasing behaviour can start to be seen. People are not purchasing the big things anymore. It's exactly the same as the UK. People are still purchasing the new improved floor mop and the new improved windscreen wipers for the car. And we're expecting that to follow the same pattern in the UK, which is it's a purchasing rationale against their available credit, which makes the change, not the fact that they have or don't have a credit card to pay on.
The retailers, as I understand it, are not open at the same sorts of hours in Germany that they're open in the UK. As I understand it, some shops shut at 6 o'clock and that's the end of the day.
And some shops don't open Friday afternoon in big
Really?
cities, yeah.
Oh, really?
Yeah.
So that must have a positive effect for you when you're selling to people when they're sitting at home in the evening, watching TV?
Yes, yeah. We're very fortunate in that respect that the retail trade in Germany has never really adapted in the same way that it has in the UK. We're having 10 o'clock in the evening opening times and so on, and particularly in the smaller towns. I mean, in the big cities maybe they still do some of that, but once you get outside of the major 10 or 11 cities, in the towns, no, the whole retail world, it runs on if you like, old-fashioned lines. The difference is the catalogue business in Germany is huge, and a catalogue business is raised to fill the gap that you just outlined, that the retailers have created by basically sticking to their guns.
So it's much bigger catalogue. So there's many more in Germany than the UK.
Yeah, and most of the big retailers have a very, very extensive catalogue business.
Oh, really?
So they reach into the customer's home using their branded catalogue.
Ultimately, do you think there will be a bigger shift to the internet than there already is?
The difficult one. The temptation is to say that it's all going towards the internet because there is the generations coming through have shopped on the internet pretty much since they owned a credit card and continue to shop. Retailing typically is still the province of the slightly older demographic who like to go and touch it and feel it. Some people will never buy goods without touching it, and others couldn't care less, quite frankly. They're a modern person, they pick up the phone, they give their credit card number and that's done. The threat to internet shopping, of course, is the increasing spectre of identity theft, fraud, and having your credit card, telephone number and details available at 50p a throw on some website in India.
Yeah.
And unless the international retailing community and the electronic retailing community gets a grip on that, then what you would predict to happen may not happen, because this crime is growing at a rate that we are not told about.
Although there is a move towards the internet, if it is not trusted by the consumer, then there may be a downturn in that until the trust issues are sorted out.
Give a customer a reason not to buy and they generally won't buy, and that applies to most businesses. Give a customer a choice between two things to buy and they generally buy nothing. So you spend your entire life getting the customer to yes, and the means that they choose to communicate with you and to buy from you, if that becomes suspect, then they just will not buy.
If you were starting with a blank sheet of paper today and you were watching this, what advice would you give to a young entrepreneur who had a model to take a set of products or their product directly to market?
It comes down to funding. Make sure you calculate how much cash you think you'll need to get the business running, and then multiply by at least 1.5, because you will always underestimate it. If you are seeking to raise cash from entrepreneurs or from angels or from banks, in the current environment they will be greedy because they can afford to be, because your options are less. You really have to understand how much of your business you want to own in order to get it off the ground. And be prepared for some tough conversations, and be prepared for people to be pretty tight with you.
So if you think that you're going to get someone to give you £1 million at a 90% 10 ratio in your favour, you're perhaps a little bit deluded.
Either that or introduce them to me.
Martin, been really great having your time today, and I hope to have you back shortly.
Anytime you like, Jamie. Great to speak to you.
Thank you.
Mate. Take care.
Thanks very much.